Good afternoon, everybody. Welcome to the TraderMerlin show for your weekend edition. It is Friday, the 24th. I guess I have a date on my screen here. Yes, it's the 24th of June today. A great day for the markets and what I personally believe is a terrible day for women's rights, but we won't make this a political show today. My apologies to all the ladies out there today. And a cheers to all of you for this Friday. I have to give another shout out to Ron. Ron up in Las Vegas gave me a bottle of Frey Ranch bourbon, which is absolutely delicious. I had some of this last night, and I'm having another nice glass of it today. So cheers, everybody. Hope you had a great trading week. Let's dive into what happened in our markets. Some great stuff going on with commodities as well, for those of you who are in that commodity space. Let me take a quick sip of this, and we'll get going. And yes, you guys like the title slide? I figured I wanted to do something about women's rights, but I figured I didn't want to be too political. So I figured this is where we all have to just find our moment of zen going into this weekend, and hopefully we can all do something positive this weekend. All right, I'm going to start off by looking at some economic announcements. So let's start there, and then I'll go to what happened in our overall market, which was beautiful. I did open up some new put positions today as Skilled Stocksman says, ES filled that gap. Yeah, and that's where I shorted it. I do think we're going to end up a little bit higher, but it's okay. My put options that I bought were for October, so I've got quite some time for those ones to kick in. All right, now, here's your earnings for today. Nothing really out of the ordinary except Carnival Cruise Line. Notice how atrociously they missed earnings. They were supposed to lose $1.14 per share. They actually lost $1.64, which just kind of blew my mind at how bad that was. They missed by 43%, and they still were up 12%. So here is your chart of the day for Carnival Cruise Lines. So you look at this, and it's like, I don't want to go counter trend. But why would I possibly want to go counter trend? And we've mentioned this many times, that catching the falling knife is not necessarily a bad thing as long as it's into a strong area of demand. And if I zoom out here on Carnival Cruise Lines, which I will not be going Carnival Cruise Lines anytime soon, you can see that this huge sell-off that happened during COVID all the way back to 2020, we're pretty much right at those lows. So kind of a little double bottom formation forming here. Hits it today. You have horrible earnings, and Carnival Cruise Line rallies out of that. So rather interesting to see that happen. The other one that happened was CarMax, which is KMX. Given the last consumer price index numbers, they said one of the biggest declines in CPI was vehicle purchases. Now, I guess this is old information. If you look at the news going forward, talking about how automotive sales are declining, you would think that would be negative for CarMax. But I think this is kind of that buy the rumor, sell the news type of thing. We are seeing earnings for CarMax that obviously is from the previous quarter. So their earnings were rather good as they were getting an inflated price for their vehicles. That is your earnings. Really nothing exciting there. That wasn't what made me, excited for the day. What really blew me away, there's only one thing that really just blew my mind, and that was this one. So I mentioned a few times over the past week that I'm really interested to see what happens with new home sales, right? It just homes, period. I think that the raising rates are going to really start to choke out the housing market. Well, notice here, I'm going to circle some stuff for you, my wonderful art skills. The previous number for new home sales was 629,000 homes. Okay, great, for the month, right? And the expectations were we were going to drop to 590. That was a pretty good drop there as far as expectation go. Well, not only do we not drop, we actually increased to the tune of roughly 70,000. That's a big plus out there, and really shocked me. I did not expect that to happen. I from what's going on with the home builders, I kind of assumed that we'd see this number less than 590 and really start to decline. So that's a great sign. And for anybody who is in that space, we can look at some of those home builders right now. Here's Toll Brothers, right? Obviously, been in a pretty aggressive downtrend for the year. But today, nice bounce up, continuing its 3-day rally, or actually 5-day rally off the lows, which, let's be honest, is pretty much what the entire market is doing. Now, if you look at KB Homes, there's your KBH. Another nice pop for them today, although I do see some unfilled gaps a little bit higher up there on KB Homes. Given those numbers, you would kind of assume that we're going to see a little more rally here in home builders. And the last one here that I would look at is Lennar. Of course, there's many other home builders. I'm aware of that, but just real quickly, I want to take a glance at what's going on with those home builders, because this economic data to me was absolutely surprising, completely the opposite direction of what I thought it was going to be. And that happens quite frequently, right? Going to be wrong. It's good to be wrong. Just don't be wrong holding a big share position. All right, let's start at the bottom, work our way up to the top. Gold on the day, really rather boring. Didn't do much. Down 0.04%. But I'll put the yellow box on there. I don't know how it's going to help us, but I feel like we just kind of been bouncing in that range. Now we're drifting towards the lower end of the range, which is obviously not a good thing. That'd bring us down to roughly 1,800 on gold, but lo and behold, just drifting down, nothing exciting. The exciting stuff starts as we look at cryptocurrencies. So Bitcoin, which has just been in a crime scene of a downtrend, is slowly moving its way back up, right? You have a slight little curve today. I personally do think we are going to see lower lows, just what's going on with all of the unwinding of position, the forced leveraging and liquidations. I think you'll see this market for cryptos drift down. But it was nice to see a little bit of a curl up today to the tune of 1.6% as we speak. But it still hasn't made any higher highs, so I'm not really looking to buy into this trend right now. But a lot of cryptos, and I'll scroll down here, you can see posting some nice gains. You see some 12%, some 8%, 6s, 5s, a lot of positive stuff, and just a few negative ones on the day. So all in all, great day for crypto. Now I'll move up to the Dow Jones Industrial Average, which had a monster of a day. The biggest green candle we've seen in months on that one, up 2.56%, closing at 31,458. Now, technically, not very significant, right? There was a small little gap that happened 2 weeks ago from the rollover session to Monday or Sunday night's trading. So it's not the best gap, but it did fill that one today. And as we look at some of these other charts, I'll show you kind of why I was looking at going short. Next, Russell 2000, up 2.9% right now. It ripped through that little yellow box we drew there, which was designed to be a supply zone. We tapped it for some of these indexes yesterday. Russell just ripped through that one today. So for anybody who's looking at the bigger picture for Russell, for shorting opportunities, you're really looking at basically 1,900 would be that next spot where you're going to get a strong resistance to price moving upward. Right now, it actually looks fairly decent from a bullish perspective for the Russell. Now, the picture changes a little bit when you look at something like the S&P. You notice that the gap back here, the gap that goes from the 10th of June to the 13th of June, is a bit bigger, right? That is a little gap there. We actually closed that one. And as we close that S&P gap today, I bought some puts. I bought October puts, and I bought way out of the money. I saw you guys ask what strike price. Let's go SPY. I honestly, I don't know, but I can look at a price chart here. I believe I did the 320s, which is right here. That last big area of kind of demand, which has already been hit. But that's kind of what my target was. I have it for October. So October 21st, no problem. I'm okay holding, that long. It's a long time away. What I always like to do, or sometimes like to do, is move my screen over here and just take a line and say, okay, well, where's October at, right? So October 21st is going to be right there, right? Do I think that this could drop down to that level by then? I'm not exactly anticipating it's going to get to 320. It's just what I want is the gain in the premium on those options. So you give me a couple good bloodbath days in the market, I may jump ship way earlier than needed, right? I think there's going to be a big spike in the premium value if we get some nice sharp drops. So I'm okay with this one. I won't be holding it to expiration. Obviously, I bought them, so I'm going directional, and therefore time is not my friend. The longer I hold these, the more premium I'll be losing. So the options I bought today, oops, just move that line. I'll leave that here just so we can kind of reference it going forward. But I bought, what did I get? 10 S&Ps today, and I got 10 NASDAQs as well. All right, that's the S&P was up 3%. Here's crude oil. There we go. Unfortunately, I don't see anything that would from a technical perspective that would draw me into going long on crude oil. You see the nice bounce today of 2.68%, but I didn't see any. There's not really any strong demand zone that I would base off of, other than you've got a nice big uptrend here, and we've had a substantial pullback over the past 2 weeks. I know some people like to look at things like moving averages, which if we throw on the shorter term ones, it's not going to fit. If you throw on some of the longer term, let's say 50 on this, we still breach those. And I know some of you love moving averages. I, for one, am not really that big of a fan. I've mentioned that before, where technical indicators are one of those things where it's like, if you torture it long enough, it'll tell you whatever you want to hear. Well, you could go through here and modify these moving averages and make it tell you what you want to hear. So let's see, 100 should get me right about those lows. So you can say, oh, well, it's hitting the 100 period moving average. I don't buy it. Still overall, it's on an uptrend, but no real reason why I would have been going long on crude oil today. And here is the NASDAQ. So NASDAQ didn't really come into any area of significance. There wasn't any real price logic for me wanting to go short on NASDAQ, other than I'm going into a weekend where coming out of weekends, we seem to have a pretty ugly Monday, right? Usually the first day of the week doesn't look good. So I ended up going with the triple Qs here. Les was asking me about what? Implied volatility? Nope. What I'm looking for is I want to be buying puts on really big up days where people are not concerned with puts. They're looking at buying calls. And when there's a huge down day, that's when I'm looking to be selling puts. So that's pretty much it. Today's action I could not do in my 1% account. As you guys know, I have specific rules for that. That can only be a selling of put account unless I put those shares, and then I can sell calls against that, but I can't go directionally in that account. So I actually did this in a separate account, which I'll probably be building more and more over the coming weeks. As you can see here, triple Qs, got some old graphics on there. Logically, it does look like the next big challenge point is going to be getting up to that previous area of consolidation, which brings me to about 314 to 303. So about 11-point range on the triple Qs between 303 and 314. That will be the next area where I will be looking to add some to my short position on the triple Qs. What else I see? Question-wise here. Cheers again. A 14-year-old rum? That sounds nice and tasty. Yeah, this is, one really cool thing about this for anybody here who's a whiskey connoisseur. Frey Ranch, which is out of Nevada, actually on the back of their bottles will tell you specifically what the composition of it is. I think it's the only whiskey I've ever seen it. So this Frey Ranch is 66.6% non-GMO corn, 10% winter wheat, 11.4% winter rye, and 12% two-row barley malted on site. So I guess I'm doing a sponsorship for Frey Ranch whiskey. Good stuff, I might say. So anyway, cheers to everybody. What do I got? Down the futures killing KJ. What did KJ say? Or JK? I'm seeing KJ and JK. Oh, Karen. Karen Merlin. Could that home sales be the folks that locked in lower interest rates? Next month should be, yes, exactly. I totally agree with you. I think that's exactly what it is. Remember, those are old homes. So, yes, they did lock in at lower rates, and maybe that's what that was the frenzy for people buying those homes with cheap rates. Over the past 2 months, we've seen that change significantly, and maybe their data that we're seeing today, the earnings today, didn't reflect that. Not earnings today, the economic data that came out today did not reflect those changes. So you're right, the next reading of this could be substantially different, and we'll have to wait and see what those changes are. But for the expectation to be that far off was kind of surprising, right? Generally, the people that are making these assessments and estimates about what's going to be with that data, they should be rather close. I mean, you're off by 100,000 homes. I mean, that's not a small difference. I get if you're off by a few thousand, okay, fine. But 100,000? I mean, come on. That's crazy. All right. It is, Michael. It is a very tasty, I have to say, the Frey Ranch is really good. It's funny because I actually, this is from Ron in Vegas, but I couldn't bring it back with me because I wasn't checking any luggage. So he on the show, he tipped me, and I went over to the store yesterday and bought it. And as I was buying it, the guy goes, "You got to try the rye." And I'm like, "I'm here for the bourbon." So I will probably go back for the Frey Ranch rye here sometime soon. All right, we finished off with the NASDAQ, which up 3.37% on the day. All in all, things looking really, really good for equities. However, something I don't usually focus on because it's not an area of my trading that I am doing regularly, although occasionally I do. I think it'd be noteworthy to talk about some commodities. So as I dive into commodities, let's take a peek at the dollar, which had really a boring week, right? You see we got 5 kind of small range candles, really consolidation. So this week has been very boring for the US dollar. And again, that's coming off the heels of huge up moves. So I guess it's fine to have a reprieve. But when you go down to some of these commodities, one in particular that has just been crazy lately, and it's kind of interesting as to why, let's look at cotton. So here you guys see the chart of cotton. Let me get that moving average off here. Cotton has been a wild ride, and we were up at 144 on cotton just about a week and a half ago, and we gapped down, huge gap from 144 down to 120 and has been selling off ever since. So the good news is your old Navy t-shirt should start getting cheaper and cheaper. Talk about some inflation numbers. Well, this could certainly help the clothing industry with their costs going forward. Huge decline in price. Now, it's kind of interesting as to why this would happen. It was one of the questions I received is why is cotton selling off? And I'm not 100% sure. I am certainly not a commodities expert when it comes to softs and grains and things like that. Gold and silver, I'm platinum, palladium, I get that. Crude oil, I got. But some of these orange juice and soybeans, not my area of expertise. However, China, which is obviously one of the biggest textile makers out there, buys a lot of cotton. So they buy cotton from the U.S., they buy cotton from other parts of the world. And what's interesting is if the dollar rises significantly, which it has been doing, right? Remember, China has to take their yuan, convert it into dollars, buy that cotton, and then ship the cotton over. Well, if the dollar rises too much, our cotton, even though our price, we see the price, let's say it's staying the same at $1.40. Well, if it stays the same, great. But if the dollar itself is increasing, it's going to cost China more to buy that same $1.40 worth of cotton because of the conversion rate. So what will happen is they'll go elsewhere, and one of the other big areas of the world is Brazil. So they may go to Brazil and buy cotton from them, and all of a sudden our cotton market starts to take a hit because we have all this extra supply. That might be part of the reason. I'm not exactly sure why you're seeing it just absolutely fall apart like this, but interesting to think of global commodities and who's using those commodities like cotton, and China using a lot of cotton in textile production. They have a choice as to where they can buy that stuff. How about that silk? You give me some good. I'll take a good cotton over a good silk any day. I know, I'm weird. But it's not just cotton. You walk through here, you notice a lot of commodities. Here's the wheat futures have really been on a huge decline. Natural gas as well, right? You've seen a big drop. We were up over 950 on natural gas. And remember, when we had John Rowland on the program, we were like here, and John Rowland is going $8, it's going $8, and all of a sudden, not only did it just kept on ripping, but now we're getting that nice retracement. And maybe I'll bring John Rowland on here soon to see why that is happening, right? What's the math or details behind this sell-off in natural gas? You also had lumber, so this should also help from an inflationary perspective. You look at lumber, board feet, it was $13.50 back in March. Now we're hitting 500s. That's over a 50% decline. It's like a 60 or 70% decline in the price of random length lumber futures. That again should help housing prices, at least the gains out there, because the cost of the inputs are starting to drop, and therefore this may be a little reprieve with inflation numbers. Now the good news for everybody is next week we have the PCE price index, and as these commodities keep dropping, in theory, that should pass through to consumers, and we should see a decline in inflation, which everyone's waiting for. But remember, just these few commodities doesn't mean that if all of a sudden it's going to come crashing back down with regards to inflation rate. But that is something to think about as we roll into next week. I'll keep going up here because we had corn, wheat. Here's your corn. Corn holding fairly steady. Almost looks like a head and shoulders pattern for any of my technical analysis freaks out there, which I am one of them. You could argue that there's a head and shoulders pattern right there. And that means that if we break that neckline, we should see a decline of roughly what that measuring object is, which should get corn back down to about 625. Right now it's at 750. So just pricing in further declines here for corn if it does break down below that neckline going forward. Let's see what else I got. Well, we talked about soybeans. Again, soybeans plummeting. They were up almost at 1,800, and now here we are at 1,520. So the good news for anybody in that commodity space, you got some amazing shorts. A lot of them are going lock limit down on a regular basis because of just such price declines. As that dollar continues to rally, that could have further impacts to the south side for some of these commodity prices. Now, what else do I have? I have a whole bunch of other things to talk about for today. Where was I? I was going to look at some, the one that really is interesting is looking at copper. All right, so copper has also had a very sharp slide, and this is really almost every single day for the past couple of weeks you've seen down moves in copper. So going from peak to trough on copper, 13 trading sessions down 20.5% for copper. Unbelievable. You see the wedge on Bitcoin forming. It looks like it's a breakout. Well, I personally don't see it. If you look there for a wedge formation, it's not really a wedge. I guess you could if you really torture. So for a wedge formation, you need to have that high is moving up and the bottom is moving up at a greater rate. So let me put that line here because there we go. right about there. So I mean, I guess you could call that a rising wedge formation. I don't put too much stock in rising wedge formations. What I'm really concerned about or interested in is if we get above this upper line. And I really, to me, that is critical. I think for Bitcoin to really have any kind of move, you got to get above 23,000. We need to close above 23,000. Until that happens, I'll just hold off on my purchases of Bitcoin. And really, I'm kind of putting all cryptos on hold. We did review one in the Crypto Investor Live program last night that I'm very interested in adding to my portfolio, and I may jump on that one sooner rather than later going forward. Okay, so I had a couple charts I wanted to show you. Unfortunately, I was scrambling to get the show ready for today, and I didn't get it all detailed the way that I want. So let me do a couple things here. First, I'll just kind of ramble on as I get these charts set up. A lot of times when you look at your chart platforms, you'll notice that there's going to be some discrepancies. You'll look every now and again, you get this crazy print, and you're like, well, how the hell did that print happen? Where did that come from? What does it mean? And we have had a situation where a couple of you have, I know Ron was posted them, sent me some the other day, where he had these really obscure prints. Like this didn't make sense, and they were way out of the money. In the past, we've seen these on things like the S&P. That chart that he was looking at was on UUP, and I don't have that chart here with me, unfortunately, in front of me. But basically, when the market closed, there were these really weird prints, and you guys might remember the show the other day where he was talking about that, and he's like, hey, UUP, the dollar's tanking. And I was like, no, it's not. Well, on his platform, he saw some very odd prints happening, and therefore, thought that might be something to look at. Well, the next day, UUP actually fell to the price that it printed, whereas no other platform showed those levels. So I'm going to bring this question up here now that I finally moved these charts around to explain it. Let's go here. And this question was from Chase a couple days ago. It's right in that same kind of vein of weird prints, right? Chase says, I'm in the US and I opened up my Binance account today and noticed this candle on all time frames for the BTC USD Binance pair. My first question was, have I been overlooking this? Same print with my mobile as well, an 8200 wick. Anyone else seeing this? So I don't trade through the Binance platform like that, but here's what happens very frequently in the markets. In a centralized market, talking something like NASDAQ, NYSE, you'll get these prints every now and again, and normally it's a stuck print, so it's like a stuck trade maybe from earlier in the day. But on something like that, where it's so far out of the money, you can see that one is just like incredibly far out of the money. I don't know, that looks like just a data error, and a lot of times, at least with other platforms I've used, you can go and edit that one out. This most likely is not real, because if you look at the price chart a little closer, you'll see that huge tail there, right? Well, if this was real, what do you think would have happened with volume? Because there's no way that Bitcoin's going to go from 60,000 down to 8,200 in one day, right? If it did, there's going to be an unbelievable amount of volume. So one thing that you might do is keep your eye on that 8,200 level or 8,200 level. We have seen in the past, some of you guys have sent me in screenshots. We saw that one recently where we had the S&P back in February or January of this year. There was this crazy print on the SPY, and you guys are like, wow, it's weird, it's out of the money. And we marked it, and we hit that last week. Now, I'm not saying that this was somebody foreshadowing where this was going to go, but it very well could be. As you guys know, I don't have a lot of trust for the financial markets. I do believe it's a shell game, it's a con game hosted by financial institutions, and those with power and money can move it where they want it to go. It's like they control the Ouija board when they ask the questions as well. So on this picture, 10,000 is my price target for Bitcoin. However, if you're seeing a print that was at 8,200 on Bitcoin, that may be, and this is a conspiracy theory, that could be somebody signaling that, hey, we're going to take it down to that level. Now, granted, that was back in November. So we've seen a lot of time pass here. This is a weekly time frame. So you'll notice right at this point where he took the image, it was trading at 20,000. Well, it could still drop down there. I am not immune to these conspiracy theories that think that institutions are signaling each other, trying to bring a price of a security down to a specific level. So where do you find the correct print? Well, you would look at other charts, right? And in this case, you'd be looking at Binance's BTC USD, right? So if I go over here, let me see where my BTC USD is from. My BTC USD is from Bitstamp, not Binance. So let's go to a weekly, which is the time frame that he's on. I'll zoom out here, and this is not intended to be. That was from when the futures came out. The day that he has referenced is this candle right here. So it's the 18th of October is literally where this whole thing spiked all the way down. Well, this chart doesn't show it, right? And we could, they could be trading short till then. You mean trading short till then? Yeah, and pushing it down? They absolutely could. Absolutely. You know, people could be shorting this whole move down, right? Unfortunately, we don't know. So I would look at different platforms. So here we have Bitcoin US dollar on Bitstamp. What I'll do is I'll just add in here real quick for everybody. We'll go to crypto and I'll go BTC USD. And then here's Bitcoin US dollar. There's Coinbase. And here is Binance's. So there's the Binance one right there. And I'll add that in. Okay, so now if I click on this one, I'm going to get a different chart. But notice this one doesn't have that tail. So I'm not sure whether they removed that tail or not. Normally when I see those things, just personal note, normally when I see those, I just shrug them off. If there's no volume on a big sell-off like that, it's a bogus print, in my opinion. But, it would be very interesting if that actually was a signaling mechanism and somebody just puts a one trade in the system at 8,200 for like 0.0001 Bitcoin as a signal, as a flag, and says, hey, if you're watching this, that's where we're going to push this thing. It could very well happen. And I'm certainly going to keep my eye on this one. Chase, thanks for sending it in. I think it is interesting to see those prints happen. But, what do we make of it? If you see that, does that mean you should start shorting Bitcoin? I don't know. It's very, very risky. Although I do believe that there is a massive manipulation on the part of the big money. And it could very easily be a signaling thing. I think I might have told you guys this story. I was invited on the floor of actually this requires another sip of Frey Ranch, just straight bourbon. I was invited onto a trading floor for a fairly large market maker in Texas. And I'm of the mindset that if you want to get answers from people who are being guarded about their information, just ask really stupid questions, right? Pretend you're the dumbest person in the room and they're like, oh, this guy's an idiot. Fine, we can tell him stuff. He won't figure it out. So I went on that trading floor and I asked him, I asked some really dumb questions, and then their guard dropped a little bit, and I said something like, so do you guys communicate with other market makers and traders? I'm like, oh, no, we can't do that. The SEC apparently records all of our phone conversations, so they're monitoring all communication, etc. And the one guy, just the new rookie trader, looks at me and he goes, yeah, but we used Yahoo Messenger. So right away, that tells me that they are communicating with other firms, and they are colluding, which is illegal, to do things. They might just text over and say, hey, let's take Bitcoin down, or let's take, NVIDIA down, or let's drag Microsoft up, whatever the case may be. Because remember, the people on the back end of Binance, they know what they have their inventory in, right? They know who's net long and who's net short. So you could actually bluff markets to push those people out, force them out of trades. So, for example, let's say I'm Binance, and I'm obviously being paid off of commissions or something, and I know that my customers are net long. Well, I can just start shorting that stock because my customers are trying to buy it. I'll just sell them the Bitcoin that they want, and I will keep on selling because I have deep pockets, and I can push that down, force those guys to liquidate. Therefore, I make more in transactions, and then price comes back up to where it was. Blows my mind the level of simplicity that you can make a system very corrupt, especially things like financial markets. Michael, really wigs me out. I watch FX futures, and I see that all the time. Yep. Just finished it and was an institute stopping everyone out. It happens much more, in my opinion, on Forex. Remember, that's a decentralized marketplace, just like crypto is. You don't see it too often in centralized marketplaces, which is going to be like NASDAQ or CME type products, because you have one location to trade those. But when you have a fragmented market, you're subject to whatever that broker is giving you, and that, to me, is one of the main problems. All right, what else did I have? Was there another question on here? I actually didn't get any new questions from you guys, so it could be a short show today. What questions do you guys have? What do you want to talk about today? Those are the main things that were really drawing my attention. Was certainly the commodities. I would say commodities is number one. Number two is the overall equity indexes. I don't see it sitting at any key levels right now to be wanting to make trades off of, but I wanted to start building a position short. So again, I bought puts on triple Qs and SPY today, and unfortunately, my XLY had a giant day today. That was kind of frustrating. I really didn't want to see that one happen, but is what it is. I'll give you guys a minute to type in the chat if there's anything you want me to check out or look at. Otherwise, I'm going to start wrapping things up here. I will go and show you what's happening on Monday. From the Monday's perspective, here's your earnings calendar. The 27th of June, very quiet. Next week, you have 175 companies reporting earnings. It's very, very quiet, so not too many notables, except Monday, you have Nike reporting earnings. That is going to be aftermarket close. Then here's your economic announcements. Very interested to see what goes on with durable goods orders. Right, durable goods are items that last a while: TVs, microwaves, refrigerators, stuff like that. And then we also have pending home sales. So given the surprise that we saw with new home sales, I'm expecting this number to be a big beat. Right? It was 3.9% decline. They're expecting to be 3.5. Heck, I wouldn't expect this number. I would expect this number to be like -2 or -1. Right? Definitely stepping up. And maybe even go positive. I mean, again, rates have gone in just a few months from 3% to 6%. A lot of people are just trying to buy whatever they can get in housing. So let's see. Abolish the Fed? Yes, 100%. Get rid of it. Will we have problems if we abolish the Fed? Yes, we will definitely have some problems if we abolish the Fed. But I think that in the long run, it's better for markets. It's better for the economy. But it won't happen. They won't get rid of the Fed. The Fed is too instrumental in making institutions rich and keeping politicians in power. So it'll never happen as much as we want it to. What was the second one? Can you see the Fed raising interest rates, driving USD JPY to 150? Yeah. Let's look at USD JPY. Absolutely. So if Japan doesn't raise their rates, where do you think this is going to go? It's going to keep on running. And to 150? Sure. This is a weekly time frame here. But look, 150 was Scott McCormick's call in January. It was 150 was his target. And I absolutely do think that is largely on the table. And one of the main reasons is if you look at the Fed funds futures, I think I have it here. We're at 1.75 right now on Fed funds futures. Now, the expectation for that July 27th meeting is we're going to go to 250. So they're thinking a 75 basis point increase at the next meeting. But what's noteworthy for me is I look at the end of the year, it's 350. They're saying we're going to double rates from here. So if they double the rates, and let's say that Japan doesn't do anything, that means that the attractiveness for holding U.S. dollars is far more appealing than any other currency out there because you can earn a lot more. So this USD JPY chart, heck yeah, it could be at 150 by the end of the year. That's really not that far away. It's like another 12% from here. I absolutely do think you're going to get there. I think unless Japan gets out of negative 0.1% territory or the Fed stops raising, then this USD JPY pair is going to keep on rallying to the upside. Absolutely. I thought you really liked the QID. Why QQQ, SPY, and not QID? Okay, great question. So for those who might not know, Triple Q is obviously the ETF that represents the NASDAQ 100. QID is the inverse ETF. Now, the reason that I went with options is I get a bigger bang for my buck, not only from the buying power perspective, but the rate of return. Now, why didn't I use options on QID? Liquidity. The triple Qs are very liquid. Like the three of the most liquid ETFs out there are the Russell, S&P, and the NASDAQ. They're incredibly liquid. So when I'm trading options, I want something that has a lot of liquidity out there because my spreads will be very tight. If you were doing options on QID, that spread's probably going to get very wide, and I don't want. So if I was going to buy ETFs outright and say I want to go short the market, yes, I would buy QID. There you go. Let's see. Traders who use technical analysis can see changes in the market quickly. What do traders who use fundamental analysis use to see a quick market change? They don't. They don't, Les. Traders, long-term traders don't see quick changes, right? Because if you're based off of data, you have to wait a month or a quarter or several quarters or months for that data to show a trend in where things are reversing. So, as a fundamental trader, I think that you run the risk of leaving a lot more money on the table in the long run. Something starts to turn. I mean, hell, you could look at Warren Buffett's portfolio. Has he gotten out? No. He's still holding on to his positions. I think I can find out. I think it's called Guru Focus. Yeah, so you go to Guru Focus. Let's real quickly check this one out. Here's Warren Buffett, and you can see his holdings, right? Oop, get that out of there. So Warren Buffett right now, he's adding to his position. He recently added, he tripled his position in Chevron, but you can see all of his major holdings here. This is all new. Like, he's just adding to positions. So as this market tanks, you know, he's going to be a guy who's going to be dollar cost averaging. There's only a couple of things that he's sold out of, which is rare. You can see here he sold out of AbbVie, and he sold out of Bristol Myers Squibb. What else he sold out of? Sold out of Wells Fargo. So he dumped all of his Wells Fargo, and he dumped his Teva Pharmaceuticals, as well as Siri. So he's adding new positions, but, you know, he's going to be late. You know, a lot of this is going to be lagging. By the time he'll unwind, those positions have already dropped significantly. So fundamental traders are generally going to leave a lot of money on the table. That's just part of it, unfortunately. So let the Fed go down alongside their fiat currency. Yeah, well, I mean, it sounds nice in theory, but if the Fed goes down, you know, we are going to have some tough times. It's going to be a pretty rough period for the U.S. as they readjust and figure out a way to, I guess, survive without printing money. If we didn't print money, we couldn't. The government wouldn't get their bonds wouldn't be purchased, right? So in one case, you have the government is issuing bonds to keep the economy afloat, to, you know, send stimulus checks out to everybody and do all these infrastructure builds. You know, that's bonds. They need money for that. Now, certainly we're paying our taxes, et cetera, but that's just not enough. We're running such a massive deficit. It's ridiculous. Can anybody tell me the last time we had a budget surplus? Who was the president when we had a budget surplus last? Kind of an interesting question. You know, ideally, we could get back to that point where we had a budget surplus. We had extra money, and then we might be able to pay down some of our debt or do things that are better for the citizens of the United States, but we're just not there. We're reckless spenders. I know several people, and I'm sure you do as well, that are so bad with their money, it's just you just shake your head and go, man, what an idiot. You know, you're thinking to yourself, they're the donkey of the day, right? They're so dumb with their money. They're so bad with their you know, checkbooks and checking and savings account. They deserve a donkey of the day. Well, honestly, the biggest donkey of the day needs to be the government. They're the worst. Like, they are a case study in bad money management and bad finance. Yeah, it was Bill Clinton. We had the dot-com bubble was actually Bill Clinton. We had a budget surplus. It's crazy to think a government would ever have a surplus budget, but they did back then. I'd love to see us get back to that point, because then that money could be put to good use. But if we don't print, we can't buy our government debt. So if the government is running in a deficit like we are, how are you going to fund that deficit? You got to be selling bonds to raise capital, and you can see this kind of vicious downward cycle. Any recommendations on some good Scotch or Irish whiskey? I like Slane's Irish whiskey. I'm not a big Scotch fan. I don't like peaty whiskeys too much, so I'm more of a bourbon and a rye guy. So, JFK. Well, I don't know if JFK had one, but I know it was Bill Clinton was the most recent one. JFK may have had one as well. Let's see. Any options trades today? Enjoyed your options talk this. Yes, I did. I mentioned I sold some puts on the S&P and I sold puts on the triple Qs. Just 20, so it's nothing big. I just wanted to have some skin in the game going into the weekend. And I bought the October expirations, October 21st. So I got plenty of time, and obviously when it's October, I'm most certainly going to be out by the September expiration. I'll never hold it past 30 days left to expiration. Let's see. Illegal aliens coming into America and sending dollars back home. Does that affect inflation? I'm sure it does. I mean, to some extent it does, but you know, it also, I guess, impacts the consumption numbers, because at least the money is going out. That money is going to be converted into other currencies. I don't think it's a dramatic impact. I don't think it's that big of a deal. Do you ever look at an all-time chart for Bitcoin on log scale? I see a nice 4-year pattern. Yes, I do. And that is actually one of my main things right now in understanding kind of where we're going to be headed with Bitcoin. Unfortunately, a lot of the platforms don't give you data that far back. So let me see if I can bring up that. Let's go here. We go. Yes, this. They're only giving me on Bitcoin out to 2020. That's not enough. So let me go to the other chart I have and pull up that Bitcoin. This one goes out further. But if you go logarithmic, even if you don't have to go logarithmic, you can still keep it on standard scale. That 4-year cycle is fairly evident, right? It's fairly clear how that 4-year cycle works. And let me just real quickly run it for you, just so I'll put a yellow box. And let's see, here's January 1st, 2019. Come on. All right, let's do it from there. and I'll go to 2023, January 2023. So there is a 4-year cycle, right? Come on, right there. Oh, come on. Sorry, everybody. I'm doing this stuff live. There's your 4-year cycle, and I'll stretch this up. So if we roll this over here, is this 4 years? That's 3 years. Sorry. I need to go a little bit more. So I thought it looked a little bit short. So let's go January 8th, 2013, 2024. Okay. So there is a 4-year cycle. And again, you don't have to necessarily have this on logarithmic, but watch what happens when I go from this peak right here to this peak right here. Again, part of the reason why I think Bitcoin's going to be going down. First year of that 4-year cycle, nothing but sell-off. Then it flattens out and then has an extreme parabolic move. Go back to this last one that started right here. All right, you had a real sharp sell-off, an incredibly sharp move up to the upside, and now we are in the midst of the next sell-off. Now you can put it there or go to the peak, right? I think that 4-year cycle is going to repeat, which is part of the reason why I am anticipating prices dropping down to 10,000. It's just based off of these moves that happen in the first year and a half of a 4-year cycle. Yes, usually commodities, there is a cyclicality to cyclicality and seasonality, Margaret. There's definitely that, but I'm not a practitioner of those. I like seasonality, but I don't trade commodities to that extent. Like a Don Dawson would be the best. Let me see if I can reach out to Don. I've tried multiple times, but I'd love to get him back on the show. Aren't major corporations spending dollars all over the world to fund their operations at a large and faster clip than immigrants? Yeah, again, I'm not so concerned about the immigration side of thing. No, it's a moot point. It's just it's a rounding error from my perspective. All right, Pablo Escobar is buying our dollars, so he is helping curb inflation. Well, they find ways to convert that back into other assets out there. All right, I'm going to wrap things up here so I can go out and go enjoy some of this gorgeous sunshine and 80-plus degrees out here in Southern California. Next week, I did speak to Trey, I believe Tuesday. I guess I look at the calendar, but Tuesday, Trey's going to be on the program. We're going to talk futures, and I'll reach out to a couple other guys so I can have some guests on the program and do a little more entertaining with guests on the show for you. So that will be the plan. Yeah, I'd love to see. Don Dawson is epic. He is amazing. This is a guy that's all he does. He's only commodities, and he knows more about commodities than anybody I've ever met. I'm surprised he doesn't have books, and he's just more of a down-to-earth kind of guy. He's just a really, really good person. The length of the BTC USD downturn is what I put the yellow box on, and the bottom would be early 2023. Right. Yeah, I'm targeting. I really think it's going to happen near the end of this year. Like a November, December, early 2023 is where we'll bottom and then start to go sideways, and then we'll get the next big rally. But who knows? Breakout. So Ryan, right at the last second, he's got to throw that in. I'm just about to go and finish my glass of whiskey and go enjoy some sunshine. And Ryan wants to go out there. Let's go to Ryan's EPV. ProShares Ultra Short Europe. Would you call that a breakout? Yeah, but I think the breakout happened before. And again, I hate being the Monday morning quarterback, but for me, I'd be looking at this consolidation here. Oh, this is logarithmic. Get me off log. There we go. Same thing. I'd be looking at this consolidation right here and anticipating. All right, I'm looking for a break above those highs. So there's your initial breakout. Now, in the second phase, you're looking at a breakout above, let's call it 1650. But it's looking good. You're making higher lows. You've gone past the downtrend thing. You've got higher lows, higher highs. So even though this is an ultra short, and I'm not a big fan of holding long-term, doubles or triple leverage ETFs, and this is short, bottom line is it does look better from a technical perspective. So there you go. Is Rick Wright still around? I've reached out to him multiple times as well, and I get the cold shoulder. Rick, I don't know. He's a great guy. A lot of guys just don't want to come. You see, for most people, there's no incentive for them to come on this show, right? There's no, unless they're selling a product or have a class that they're promoting, a lot of them just don't want to come on. But I will try my best. I love Rick. He's great. I'm a big fan of Rick Wright and his teaching style, a very simple guy and simple strategy. So I'll reach out to, there's three I want to reach out to. Don Dawson, Rick Wright, and Tim Pessett are the three I want to get on, and Michael Young. So I got four I want to get on the program for you guys. So I will hopefully get to that this weekend after I watch. I've got so many videos to watch. I'm going to watch Larry Jacobson's options class, which I'm excited to watch. I'm going to watch if you didn't get a chance to watch that testimony in front of Congress about cryptocurrencies and digital assets, you should check that one out. Some very, very good information. I think very professional sharing of information with politicians who are completely clueless about crypto and digital assets. So that would be an interesting one for people to watch if you're a nerd like me and want to watch that kind of stuff. What else I got? Last minute ones. Good. Big Eb, I did as well. So cheers to that. Maybe we can cheer on a market crash together. I mean, personally, I want it to rally a little bit more so I can buy more puts. But today was just just getting the feet wet, getting the toe in the water. But I think we'll see a little bit of a move up and then just a slow drift down. But next week's PCE core price index number is going to be a really big one. And let's not forget GDP numbers coming out as well. Wednesday, we get that final number that says we are officially in a recession. So by Thursday of next week, the headlines should read, U.S. in recession. We'll see if that freaks people out. All right, everybody, that's going to do it for me. If you like today's video, you can comment down below the YouTube video, as many of you have been doing. That's the easiest way to get questions answered on the program, or you can email me at TraderMerlin@gmail.com. That said, cheers, everybody. I hope you have an absolutely fantastic weekend. Go do something good. Be a happy person, and I will see you all on Monday. Take care, everybody.